Hey traders, Marcello here, founder of the Day Trading Academy. Today we're answering all your questions on this series of Ask Marcello. If you have any questions, don't forget to mark them with the hashtag Ask Marcello. I'll go ahead and pull all the questions. If you want to follow me on Instagram or Facebook, whatever the case may be. Don't forget to subscribe here on YouTube so I can interact with you guys, answer all your questions. I've had a great response so far from you guys, so I'll definitely continue to keep doing these videos for you. And just subscribe so you can make sure if I answer your videos or not. The question I have here is from David. And I'm driving to Miami. I'm trying to do this while I'm driving to Miami. What's the top futures market that you trade? Only the US futures. That's the first question. So the best, in my humble opinion, David, okay, I've been doing this for about 15 years, whether it's learning or teaching or trading, right? Any combination of those. And the best market for me is the futures market. It's less manipulated, it's easier to get into, and you can make a lot more money with less. Full disclosure, obviously, right? You can make more money with less. You can also lose more money with less. So the most traded single market in the world is the S&P 500. The future, the E-Mini S&P 500. If you're trading, what I believe in, David, is that if you're going to learn how to trade, you have to learn how to simplify the process in order to make sure that you are going to focus on the things that are going to make you successful, which is the psychology aspect of it. If you simplify the process so your analysis and your process of trading is simple, what it's going to allow you to do is focus then on what's important, which is the psychology. Because trading, David, is 10%, 15% technical, and that's all the lines and strategies and indicators, and it's 85-90% psychological. And that's why the majority of people in this business fail. Obviously, full disclosure, trading is risky. You don't want to lose, don't risk your mortgage money on it. Obviously, just because someone says you can make money or the results of a strategy works in the past doesn't mean it's going to work in the future, okay? So the main one that I teach everybody on and I've traded in the past is the S&P 500. The other popular ones that I would say a lot of other traders trade is silver, it's crude, and gold. Those are probably the other top popular ones as well, and the other indices as well, like the NASDAQ, the Mini Russell, all those. Mini Russell, no, but the NASDAQ, the Dow, those markets, yes. Second question, what is your financial management? Have a predetermined risk versus reward? What's your capital exposure without leverage and leverage? Use stop, loss, and targets. So the futures market works very differently than the Forex or the stocks in the stock market. Whenever you think of margin, when it comes to Forex and stocks, you think about the money that you borrow. So the leverage that you get in stocks and Forex, you literally have to borrow the money. That's what you guys call margin. So if a broker says, I'm going to give you margin of 500 or I'm going to give you a margin of 4-to-1, that's the money that you borrow to have leverage. Obviously, that is borrowed money, right? So if you lose it, you have to pay it back and pay interest on it. In the futures market, there is no physical product that you're buying. We're literally speculating as to what direction the market's going to go. In the case of the S&P 500, we're literally, I don't want to say betting because that has a really bad connotation, but we're literally making a hypothetical prediction of what direction we think the market is going to go. And if it goes in that direction, we make money. If it doesn't, we lose money. So when you are going to trade the S&P 500, the margin is the minimum amount of money required, to open up an account and to trade. So on the S&P 500, the minimum amount of money required to trade is $500 for the S&P 500. The minimum amount to open up a brokerage account is $1,000. So that literally means you're going to open up an account with $1,000, Every time that you trade, assuming that you're trading the S&P 500, you're going to need a minimum of $500 in your account, because whenever you put a position in, you get in and you get out, they're going to reserve $500 from your account. After that, in terms of risk versus reward, a minimum, absolute minimum of 2 to 1, David. So all of our newer traders in the academy, we teach them the risk versus reward, a strategy that we teach, which is minimum 2 to 1. And eventually, when they become more proficient and more efficient at making money in the market, that grows to 3, 4, 5 to 1. That also can change with the way that the market is moving, because obviously, you know, I think this video might come out next week, the first week of July, and in the last week of June, second to last week of June, we had great volatility. So when you have the volatility and the volume, you can do a lot better than normal. You see what I mean? And we do have targets and stops in the beginning on the traders, as I mentioned. In order to make it as simple as possible, we make sure that the only thing that somebody focuses on is getting into the trade. That's it. So obviously we aren't trade advisors, right? We can't legally tell you where to trade, but we can teach you how to read the market properly. So once you learn how to read the market and take trades, that's when you start to create your own plan. And obviously we work with everybody with that to obviously develop their own kind of trading style within what we call the congressive strategy, which is what I consider to be structure-based trading, because it allows us to have a structure in the changing markets. So I believe that's the second question, David. And we do use stops and target. The leverage is built into the futures exchange. And so, you know, I would say that a comfortable amount that you open up a futures account with is probably about $2,000 or $3,000. And of that, you're only going to use or reserve $500. So you can do the math on that with the percentage of leverage. Next question, what other businesses do you own or investment? So I own quite a few other businesses, David. I obviously am, I say, semi-based in Colombia. I have a few businesses there. I have a juice company there. I have obviously rental properties. I have a resort that I'm building. I just bought a farm, so that'll go there. It's going to be really interesting because the farm that I purchased is one of the oldest in Colombia, so it has a ton of history. You're more than welcome to come. Other than that, I have a few restaurants. I do a lot of stuff, David. The financial markets for me have really allowed me to diversify quite a bit. Obviously, my focus with the academy has been, I often have had to take a step back from trading and at times even sacrifice my own trading to train traders. So the idea for me was to be able to make people consistently profitable so I could find traders to trade for me. So I continue in that endeavor as well, which is another business that I have. And I have a business registered in Mexico as well. And I'm looking at obviously other opportunities around the world. I'm really interested in Asia. I'm really interested in parts of Africa as well. But I have a lot of things around the world, David. So really, really good questions. Thank you. And let me know if you have any other questions. The next one we have is from Rob. Rob, your question is going to go there on the screen, so I'm just going to go ahead and ask the question, Rob. Rob, one might think that this may provide better returns in silver itself. Would that be proper application of the information, or might there be something or angle I'm missing? The question in the beginning says, this question came up when you mentioned that the E-Mini futures, there's leverage, particularly in silver, that it's 5,000 to 1. So just because a market, and I'm just going to read your question one more time, Rob. Okay, so every market, Rob, has a different personality, and when you're going to learn how to trade, what I try to do for people is make it as simple as possible. So you're not going to be watching the market for 10 hours a day like in Forex. You're not going to be having to do a bunch of homework and read reports and find stocks to trade, because obviously it takes a lot of extra work. I like futures because it's purely technical analysis, which means you literally open up a chart and you start trading. That's it. And the beauty of it is you can choose one chart to trade or one market to trade, and you really have to simplify the process, as I mentioned, I think, in the other question that I was responding. So if you simplify the process, you don't have to do any homework, you only trade one market, you only trade one way, then we can focus on what's the most important thing, which is psychology, okay? So you don't want to start trading a market that has as high of leverage, especially when you're new, because obviously the downsides or the negatives of day trading is that you can lose a lot of money. So what you want to do is you want to try to balance that out. For me, I consider the S&P 500 to be like a 30-year-old. Every market has its own personality. The S&P 500 is like a 30-year-old that calm and collective the majority of the time, but it can go out and party and get rowdy when it wants to, right? So a market like silver is very, let's say it's like a 20-year-old. It's going out partying and it's just really, really erratic a lot. So it's harder for someone to learn trading that kind of market. So even though you can make more money, at the end of the day, if it's harder to learn, you're not going to make that money in the long run. So the idea for me is to teach everybody on the S&P 500. Once somebody gets the consistency to be able to trade the right way, then they can switch to any market they want. Because what I try to teach people is how to read the market properly. Once you know how to read the market, understand market structure, know that the market is dynamic, you can't just do the same thing all the time, right? Then you're going to be able to go ahead and trade any way you want. You know, swing trading, long-term, short-term. You can trade in Asia, in Europe, wherever you want. So really, really good question, Rob. My pleasure answering your questions, my man. Believe me, it's been a pleasure kind of to see the response of everybody with this Ask Marcello series, so I'll definitely keep doing that. We're headed to Monterrey, Mexico, then the city of Mexico. And then after that, we head back to Colombia for a moment. And then after that, I go back to Mexico. So quite a rigorous travel schedule. I'm doing this for business, obviously, not for travel. You know, these are the days I've kind of transitioned. And you know, this kind of goes back to your question, I think, to Dave, who asked it first. I'm transitioning into more longer term trading, which is called position trading. I've been trading some silver miners recently because it's a bit easier and it doesn't require as much time. So let me know if you guys have any questions. Always mark it as Ask Marcello, and don't forget to subscribe.